Hi everyone, I'm Kelly and I'm covering for Sarah today on another episode of What the Heck Is, where we tackle the tough questions and not so tough questions about running your business. Today we're joined by Chelsea Rodrigues, who is our amazing accountant and finance expert here at BrainSell. So Chelsea, welcome.
Thanks, Kelly.
So Chelsea, there's been a lot of discussion in the business and finance world lately about revenue recognition and the standards around that. So please, Chelsea, tell us, what the heck is revenue recognition?
Revenue recognition is one of 10 standards within the generally accepted accounting principles that accountants have to follow within companies. And what it states is when you recognize revenue. You can either do it the cash basis method or the accrual method, and it's required by tax purposes.
Got it. That's really interesting. So what companies would you say would use the cash basis over the accrual basis?
Yeah, so the cash basis method is the simplest method. You recognize revenue once that cash is received in hand. And those are usually small little personal businesses or very, very small businesses that don't make much revenue over the course of a year. The accrual method, you recognize revenue when the service is performed. So I perform the service today, I'm going to recognize that revenue today, no matter if I receive that cash 2 months from now. So that's for medium-sized to large-sized businesses.
Got it. That sounds like it could get a little bit complicated. How do you use these methods?
Yes, so for most companies, they have ERP software such as Sage or Sage Intacct, which helps them recognize their revenue easiest because it automates the process. For those that don't and use a manual method or use QuickBooks, it's a little harder to do and they have to do it manually themselves.
Good to know. All right, well, Chelsea, thank you so much for that explanation. And thanks everybody for listening in on another episode of What the Heck Is. Bye.
Bye.